Hey there, this is Casey Dimon from TaxSaleAcademy.com and welcome to this week's Tax Sale Tip Series. All right, I want to talk about something I feel is incredibly important to us as investors. Much of what we do involves researching properties, placing bids, offers, or attempting to buy those properties somehow while figuring out how we can make money off of them. We focus so much on that aspect of the business. But as investors, that's really not the most important thing to us. The most important thing to us should be, how can we protect our capital? Now, obviously, when we invest in real estate, we have a real asset, something tangible, something we can touch, and something that will hold some sort of value in most situations. It's not like buying a speculative stock where the value could plummet to zero overnight when the news story breaks that the company's a scam or something crazy happens, right? But there are a few different scenarios that we must take into account on every transaction if we want to learn how to protect our valuable capital. Before we start, understand that your risk on tax delinquent real estate is determined before you make any investments. You must know everything about that real estate. If you make a mistake or simply don't make as much money as you thought you would, then you can just about always go back and figure out what you missed pre-purchase. And this is something that I've talked about before, but when people email me and they have these sob stories, what usually happens, they don't know what they're doing, they go buy a property, they realize they made a massive mistake, then they'll email me after they found me online, Googling a tax sale training or something like that, asking how can they get out of this situation. And every single time I can go back and figure out exactly where they screwed up and what they could have easily spotted pre-purchase if they knew what they were doing. Now, we must understand, first off, how to research real estate. And I know that I likely say this in just about every single video that I put out, but research is the key to success in this business. If you don't know how to research real estate, you're opening yourself up to quite a bit of risk. And while the real estate will probably not plummet to zero, it could have something attached to it that might push the value down tremendously. For example, a $150,000 city or county lien for those code violations. I've seen these more times than I can remember. Another example is when you think you're buying a house, but it's a vacant, landlocked lot. If you screw up your research, you screw up everything, and you screw up your number one task of protecting that capital. Secondly, we must understand how to accurately value real estate based on our expectations. If I'm going to sell a piece of real estate at retail prices to an end user, to like an owner occupant, then that is one valuation. If I'm going to sell it to an investor next week with an as-is everything, that's a completely separate valuation, much lower than that end user is going to pay. So regardless of our strategy, our valuation method must be accurate, as it will be the determinant of what we bid on that property. When we determine what our maximum bid amounts will be, we do this by working backwards from the price that we're expecting to sell at. The expected sales price must be conservative. It must be a nearly guaranteed number. When you're looking at what you think you can sell a property for, you should never, ever use some sort of pie in the sky figure that you hope you can get. Instead, you must use a figure you can get, and then back out your expenses and your margin and determine your bid. Another part of protecting your capital is factoring in your holding time. As part of protecting that capital, we must make sure we factor in how long that capital is going to be deployed. For some, that capital might be borrowed. On the extreme end of things, some people, like myself, when I started, use credit cards to start off, and those credit cards have stupid interest rates. When you're paying 24, 25%, you had better make sure you're going to have a short of a holding period as possible. But even if you're investing from a savings or a checking account or IRA or whatever it is, you must be certain that you factor in the opportunity cost. I've seen people park their money in real estate for 10, 12 years, and they're excited because they make a 50% return over those 10 or 12 years. That might sound good to some people, but I've got Academy members who are making that same return in less than 6 months. So make sure you factor in your holding period. In the end, what I see is people get really excited about investing, and they choose the wrong opportunity. They choose either a problem property or one that just doesn't make any money or as much money as other properties could make. I'd rather miss an opportunity because I was too diligent in protecting my capital than invest that capital into a property that leads to potential issues. As an investor, our number one job is to protect our capital. Remember this, regardless of what's going on at the auction, regardless of what you see other people doing, regardless of whether you see your best friend making $100 million by doing this one thing, your responsibility is still going to be to protect your capital at all cost. If you do that, you're going to be in this business much longer than most people. When you start getting reckless with your capital, you're going to be out of business very, very soon. At some point, it's going to catch up with you. I truly hope this helps you out. That's all I've got for you guys today. If this episode or any of the episodes have helped you out, please do me a huge favor. Hit that thumbs up button, that 5-star review, or leave me a positive feedback comment just to let me know. Those reviews do really help us out when it comes to the algorithms and all that stuff on the different networks. So again, if it helps out, please take just a second to do that because it means quite a bit to us. And as always, if we can be of any additional help to you, make sure you check out the Tax Sale Academy at taxsaleacademy.com. Hey, take care and make it a successful day. We'll see you next time. Bye-bye.